Can we start now or shall we hold on for some more time?
You can start off, Nanikiran, sir.
48 participants are there.
Yeah, 52.
52, including our 4.
I think we'll wait for 2 minutes, 2 more minutes, then wait.
People are joining continuously. Just 10:05 we will start, Venkatesh.
Yes, sir.
You can start. I think we have enough people. 71 there. Need not keep them waiting. Yes.
Good morning and warm welcome to every participant who has come to here today. We are extremely happy and proud to be here today, this morning, Saturday morning, for CSR Spark. A few points before we start. The CSR Spark is started in 2019. Basically, it is the idea of it's a platform for all stakeholders in CSR to meet. It's completely honorary. Primary objective is to create robust implementing agencies which will help in proper implementation of CSR. This CSR Spark has conducted several physical and virtual events for the past 3 years to spread awareness of the CSR law. This idea came to a person who was running successful business, and it is a great courage for Mr. Krishnaswamy to give away the business and start CSR Spark, and he is now mostly focusing on it, and he wants to spread this message across. So he joined hands with Mr. Nikhil Pant, who is an honorary advisor of CSR Spark, a great teacher and possesses expertise on the entire part of the CSR law. As hands-on expertise in implementation, has agreed to spare his time today in an honorary basis. We sincerely thank Nikhil Pant for making it, because I have attended almost all the session as a part of CSR law. His amazing knowledge is really, people have appreciated in a big way when we have conducted Coimbatore, Chennai, and all virtual events. Yes, I think he is a master blaster in this particular area. Thank you so much.
Thank you.
About today's event, in continuation of so many events, this event is to elaborate the nuance of filling the recently introduced Form CSR2. Any other doubts, whatever you have on this, you can just get clarified. Krishnaswamy is the person, actually, sincerely, my sincere appreciation to Mr. Krishnaswamy also. I am basically from Coimbatore. He is also from Coimbatore. A proud Coimbatore can say a person has got guts to come out of the entrepreneurship and start a forum like this to help people. It's a bridge between corporates and the implementing agency. I'm a proud Rotarian too. I would like to say one thing. Because of this inspiration, 2019, we have been doing smaller projects. Absolutely, we didn't have any regrets on that. But after associating with CSR Spark, last year, I've identified a company from Dubai. It's a Zurich International. It's the largest insurance company based out of Dubai also, because they have an office in Zurich. Has given about 40 lakhs of rupees for during this COVID time. 80 lakh rupees of oxygen concentrators for the needy people for the King's Institute, Chennai. And recently, day before yesterday, we have received $28,000 for implementing the to produce the napkin for girl child, those who could not afford. I think it's one of the soul satisfying project for us. Thank you, Mr. Krishnaswamy and Nikhil Pant, for inspiring us. And I'm a part of CSR Spark as a patron. Thank you so much. Welcome you all once again. Feel free to ask any kind of doubts regarding CSR law. I think Nikhil Pant will be able to do justification on that. Thank you so much. Over to Krishnaswamy, sir.
Good morning, everyone. I think we've got very good participation. People are continuously logging in, and we didn't expect so much of a participation and support from the general public and the CSR fraternity. But the registrations crossed 300 yesterday, and amazing. And more two aspects. One, the topic is very, very current, and second, you have Nikhil Pant on board. These two are the aspects over here. And somehow we've been able to impart enough knowledge. Now, before going into Farm CSR2 and the how you fill it and other things, I thought we should have a small recap of what is this current CSR scenario as of now. So we start with a small backdrop. Financial year 1920, most of the businesses were cribbing. Hardly any business were being done. Everybody was literally crying over that. Not much of business happening and everything. And unfortunately, towards the fag end, we had the first wave of COVID. Then first wave, second wave, third wave. 3 waves you've gone through, and we've been struggling with the pandemic right through. And the government on its part has brought in a lot of legislation, sort of amendments, so that contribution to COVID can be considered in CSR. Quite a lot of amendments are there, and circulars and notifications. And the first to come out, in spite of all these things, the company's amendment rules were kept in abeyance for quite some time because of the COVID. Ultimately, it came into being on 22nd January 2021. Again, it spells out all the definitions as usual, and it introduces Form CSR1. The intention is to bring the entire CSR implementing agency into the Ministry of Corporate Affairs ambit, so that you know who is doing CSR, number one. Number two, the annual action plan came into being, brings in transparency from the corporate point of view. If you're a corporate and if you come under CSR, annual action plan comes under the CSR policy. You have to give a spell out what are the projects you're going to undertake, if possible, the geographical location and the amount to be spent. And this gives an opportunity for the implementing agencies to have a look at the website and find out what is happening in which company. And the next clarity came on multi-year projects, ongoing projects. All these things were very, very vague previously. Whether you can do it for 2 years, 1 year, or all these things were there. These came in. Then the excess spend and failure to spend. These have been spelled out very clearly in that. And finally, the Annexure 2 was introduced for CSR reporting, where more data was being asked for. Ultimately, what happened, the most recent one is the company's accounts amendment rules that have been amended recently in February, introducing Form CSR2 for companies. This, what does it do? This is an online form. It should help the government to get more data out of it. That's all. Of course, Mr. Nikhil Pant will be elaborating more on this. I need not get into it. Now, if you are in the CSR arena, there are certain websites you have to have an eye on. First is the e-book companies. The first one is maintained by the Ministry of Corporate Affairs and the Institute of Company Secretaries of India. Gives you all the data regarding the Act, rules, Schedule 7, notification, circulars, everything is there. You go into it, you are able to locate. Okay, thank you. Then the second one is the National CSR Portal. This is again a very good portal. You have to continuously keep visiting it, especially on the implementing agency side, to find out how much is being spent on company wise, geographical wise, and also the development sector wise. Everything you can see, and it will give you some news on the CSR also. Finally, our own website, CSRSpark.org. Please register over there. We'll keep updating whatever is there from the ministry. You cannot be always looking at the top 2 websites. Instead of that, you can do that as well. You keep looking at that. As well, you can register into CSR Spark. Now, something interesting. Against all this backdrop, what is the CSR scenario? How comfortable should the implementing agencies feel when working in this scenario? Should we continue in this scenario, or shall we look out for some other job? This is how you'll be thinking about what is happening to the CSR funds. Quietly, in the year 2019-20, 1 lakh crore was crossed. That's a great milestone. It was crossed. And you can see the number of companies keep on increasing. From 16,000 companies, it has come to, you see, only up to 1920. Forget about 2021 as of now. They've been increasing to top 20 companies. Okay, they've been spending 22% of the total spend. So remaining other companies, see, top 20 companies means the 22,664. The remaining 22,644 companies are spending the balance amount, 80% of the amount. So there is still scope for your NGOs to go look out for more companies, more opportunities to get money. That is always there. Now coming to 2021, the data is being updated on a regular basis. You see it today, next week it is increased slightly. A few weeks back, it was only 8,000 rupees, 8,000 crore was seen over there. Now, just for 8,633 companies, you have 20,360 crores spent. Imagine when all the data for all the 20,000 companies come in, what happens? It should be double at least. You should be able to get at least 40,000 crore for 2021 would have been spent. And the next aspect is people are worrying that it will go to the what you call funds. Specified funds, and it may not be available for execution or implementation. That I will explain in the next slide. Now, this is a very positive thing. The implementing agencies have to keep their eyes open and look out for the funds. There are enough funds available. And how come this jump? What is the reason? This is mainly, I will tell you, previously the corporates were allowed to not spend and just explain the failure to spend. They need not do anything with the money. But right now, it has been specified that you have to bring it into a multi-year project, or it has to be deposited in some specific fund. So naturally, the money is coming out now. Nobody is keeping it idle. If they keep it idle, they're going to get into penalty. So they are not going to do that also. This is what is happening. So the next slide, I will tell you, these are just interesting figures. This is development sector wise. You can see various development sectors on the left side, and it is totally skewed. The major component goes to education, environment, and health. These three take the major chunk of the implementing, whereas the others are slightly much below. And you might be worrying, how come this? What about the funds which for which people are signing a check at the end of the year? It was very good that only around 8% up to 1920, only 8% of that money was going in for funds. Remaining 92% was being spent through implementing agencies or directly, or rather you call it was being implemented. But you can see that 2021, I have not shown the figures because it is being continuously updated. But just viewed it slightly, I found that around 15% has gone to the specified funds. Even then, there is nothing to worry for the implementing agencies. We have enough money in the market, because from 20,000 crores, it is going to shoot up to 40,000 crores. All the CSR money is going to come out. No company is going to have it with them. So naturally, you need not worry about it. So this is again a positive point that more money is coming. And only thing I request that the implementing agencies try to diversify your portfolio and bring in more development sectors. Apart from all these development sectors, you find two things missing. One is the agriculture as such and clean energy. So this is one thing we've been requesting the government and bringing it up to you. Even now, this can be done, but it can be put into rural development, agriculture. But if these are specific, clearly, more people will go to support agricultural practices or go in for clean energy. These two are still pending. Hopefully, somebody has an eye on this. And finally, of course, the geographical expenses, what is happening around. You can find that I just taken a state GDP. This may or may not be correct, but approximately you can say what it is producing, proportionate to that, you should get back as CSR also. Spend should be there. You've seen that the average national thing is around 0.07%, whereas a lot of the ones marked in red are lagging behind. They have to come up. Delhi is 0.11%, and there's one more thing. I think, if I'm right, Odisha usually does well. Odisha, 0.14%. That is the number one. And Maharashtra, as usual, 0.12 high. Because Maharashtra, again, very good implementing agencies are there in Mumbai and so the idea of showing all this is, please, all the implementing agencies, try to buckle up, do a good job. And because any doubts, we are here to clear. In whatever is possible, I'll try to clear it on my own. Or any other doubt, I go to great Nikhil for all those things. And finally, thank you. I'd like to thank all of you for having joined us. LAKSHYAA is Nikhil is the founder. In fact, this event came into being just because Nikhil said, Krishnaswamy, we will do one pro bono, free of cost seminar on Form CSR2. He said, yes, okay, we will do it. Of course, for the platform, I have to look nowhere. Innovative is there. We had Venkatesh online with us, welcoming all of us. And of course, David and his team at the background. And finally, local board, Ninad, suddenly I got into him. That's a different application where he has a database of a lot of corporates and NGOs. And from there, he is able to bring in some people. I think welcome members of local board also. Must be new to CSR Spark. Please do, all of you, please do register, and hope we'll be able to interact more in future. Thank you. And it's now all over to Nikhil Pant. I should have given it to him by 10:15. I'm 4 minutes late. Anyhow, Nikhil.
Thank you. Thank you so much, Mr. Krishnaswamy. Thank you, Venkatesh. Thank you, David, for the back-end support. And, a very warm welcome to all the participants from different parts of the country. On behalf of LAKSHYAA, which is a compliance with impact organization, the whole purpose is to educate and strengthen the ecosystem of the development sector. And we work very closely with people like Mr. Krishnaswamy, who has set up CSR Spark a few years ago. Totally out of a philanthropic approach. He wants to give back. He's a farmer. He does his, farming in Coimbatore. And he's also one of the students of the course that I launched at the IICA. I was the course director. I was, under the leadership of Dr. Bhaskar Chatterjee. This was a 9-month course on CSR to develop CSR professionals. And I'm so happy to say that the course, which began in 2014-15, has developed people like Mr. Krishnaswamy, who are now coming forward to strengthen and educate the ecosystem. So thank you once again to CSR Spark, Mr. Krishnaswamy, And then people like Venkatesh, through Innovative, he's always been there to come forward. And I was just speaking to the two of them to say that we are all, partners in crime, or the three musketeers, to try and do good here and to kind of educate and strengthen the system. So the topic of today is a very relevant topic. And over the next maybe an hour, how much time do I have, Mr. Krishnaswamy?
You can take about an hour, no issues.
Yeah, so the idea would be to educate the people who are there in the ecosystem present here, and also to then share this material liberally. Because
can I interrupt? You will have to answer some other general questions also on CSR, apart from CSR, Form CSR too. Okay.
Right. We will do that also.
It will be very fine if you can help them.
In fact, some of those questions, since you've already shared with me, I will weave them into my narrative so that if those they get answered on the way.
Okay.
Very beautifully explained by Mr. Krishnaswamy, the entire lay of the land and how this entire piece has evolved. And what began as a rollout from 27th of February 2015, and we've just crossed that 8-year period, and we are into the 9th year of this legislation's rollout. We are finding that the government is bringing out new compliances. So there are two key pillars to remember here: compliance and impact. Compliance, you need to know the rules of the game. If you know the rules of the game, you will play the game well and you will score the goal. And I am a sports person myself. I give the analogy of sports coaching quite a bit. I'm a squash coach and a squash player as well, right from my childhood. But let's take soccer, for example, a very popular sport. So you may be very good in soccer, that means impact, but you don't know the rules of the game, which is compliance. And you may just score a goal and the referee will say offside. And if you do not know the evolving offside rule, you may be focusing too much on the way you hit the banana kick or the inside, or the outside kicks or whatever. But you will fail to actually convert that goal into an accepted result. So compliance goes with impact, and the key to both these is to keep compliance under control and then focus on impact. Keep compliance under control and focus on impact. And today's session of mine will lead you through the process of doing this. And while doing it, I will also deconstruct Form CSR 2, which has just come out on 11th of February. So I will do a screen share, and I will actually not be making any presentations or PPTs. I will lead you through the exact and the actual government notifications and the Gazette notifications to tell you how you should do it. Because it's like a do-it-yourself kind of a thing. It is no rocket science. And the whole purpose of LAKSHYAA is, as you can see, the arrow, which is aiming to the infinite, is to achieve those infinite in terms of the impact, but be very much in control of the situation. And by the end of today's session, I hope that with this partnership between CSR Spark and LAKSHYAA, we would have further taken a very, very strong step to strengthen this ecosystem, which includes, I would say, government functionaries also, but primarily the corporate CSR partners who engage very closely with implementing agencies or NGOs. And I could see from the registration chart that Mr. Krishnaswamy shared with me, a large number of them have come from right across the country. And right now, being Q4 last month has begun 4 days ago. The next 2 weeks are very critical. They are absolutely critical. And I will tell you certain things which will help you not only achieve the compliance with hopefully the impact for FY22, but prepare you for proper compliance with impact for FY23. So the recordings will also be available through the CSR Spark platform, and I will also circulate it through my own network. So feel free to use it, to disseminate it, to have queries with it, because the more we understand it, the more we will be able to unleash the power of this most amazing legislation. So I will now do a screen share, and I will take you through some of the stuff that I have uploaded for you. And here I start off with my legislations first. And if you see the new legislation that has come out, the circular that has come out, it gives reference to two very key points. Section 134, it mentions, and section 134, I don't know how many of you have even read about section 134. So I always keep a hard copy of myself, and this was a publication released by CSR Spark, which I don't know if is visible here, Mr. Krishnaswamy. I think it is visible here now, I guess. which we had done, I think, in 2019, if I'm not mistaken.
Yeah, 2019. 2019.
Yes, and I think again, Venkatesh was there with Innovative to help us. So section 134 is on financial statements and the board's report. So this circular emanates from section 134, and it also emanates from subsection 4 of section 135, which I've highlighted here for you, which is this particular section, if you see. And what does this section say? It says the board of every company referred to in subsection 1, look at 4B, which I've highlighted, ensure that the activities as are included in the CSR policy of the company are undertaken by the company. So this is now a board mandate. It's a board compliance. Now, to further this, sections 134 and 135, this particular form CSR2 has come out as a follow through of this amendment of January 22, 2021, which everybody is aware of. So look at the way the government has to work to ensure that the law, this is the law of the land, and this has been done by the parliament. We are a democracy, and in a democracy, you and I elect those people who go and make the laws for us. And then those who get elected, they come out with these notifications and the rules to implement those laws. So this came out about a year ago. I will not go too much deep into it, but I will definitely highlight some of those areas. In fact, I will, because I'm mentioning this, this is related to, if you see, the rules of 2014. In fact, this whole began through the Companies Act 2013, and this is an important notification which has actually worked upon the rules of CSR, which began in 2014. And I have done a comparative analysis, which I will share with all of you as a follow-through, Mr. Krishnaswamy. This is a detailed comparative analysis of the CSR rules of 2014 and the CSR rules of 2021, January last year. Because this will tell you, this is what the government was thinking in 2014, and this is what the government is thinking in 2021. Interestingly, the same dispensation is there at the center. And that has led to some consistency in the way the government is thinking. While we do a lot of data analysis, we tend to forget that we must also do some thinking analysis of the way the executive is managing the country. What is the mindset? And if the mindset is read well, then you will know which is going to be the next circular. So you have to be like a Vishwanathan Anand, like a chess player, to understand what the compliance is today, because there is a background to it, and what will be the next step forward. So if I read the mind of the compliance authority, I know what lies ahead. And I will tell you a few of my next moves on the chess as we go along. I will share that as part of my analysis over here. I will share this also. This is the detailed point by point analysis of the way the green is the 2014 and the blue is the 2021, which has happened. And we will share that also. Coming back to Form CSR 2, you will see that this is an amendment to the company's accounts and amendment rules 2022, right? Because CSR is all about money and spending. People are saying, I got unspent on 31st of March. How do I manage it somehow? It is all related to money spending. Mere transfer of money is not spending. And there are ways by which there is an ongoing project that has now been defined, which is, again, if you go back to the law, the ongoing is defined by the clause 6. The clause 6 defines the ongoing project, and if you go to clause 6, you will see the ongoing project. So I am therefore, what I've done is over here, and I was telling this to Mr. Krishnaswamy, I will open all these government documents and the law document in front of you, because you need to have it in a hard copy. And that is what this hard copy was that CSR Spark had published. And maybe we need to come in with a new edition also, Mr. Krishnaswamy.
Yeah, next year we will do it. This year we will do it. This year
in fact, we could even publish one, before 31st as a PDF format, maybe, and share it with the audience so that they all understand how this whole thing is evolving, Mr. Krishnaswamy. And I will also help you to do that. So this becomes extremely important to understand the context and the Aadhaar. What is the Aadhaar? What is the context? And the Aadhaar is always linked to the intent. What is the core intent of the legislation? And the intent of the legislation is very beautifully enumerated by clause 1 of the law, which says that if you are a profit-making company, you need to give something back. That's the nutshell of the law, if you ask me. And then they've defined, to be able to do this, it has to be a board-level function. It has to be driven by a CSR committee of the board. It has to be driven by which the new amendment has now therefore said, How do I implement this if I'm, say, the Prime Minister, or I'm the MCA secretary, or I'm the people who are controlling and managing the implementation of this law in a democracy? Otherwise, the law fails and democracy fails. So when you and I understand the nuances of these legislations, and actually if we implement them well, we are actually strengthening the democracy in our country. It has to be understood in that perspective. Now let's go back to Form CSR2. What has happened is that the amendment has come in January 2021. And if you go to the last page of the amendment, there is a detailed Annexure 2, which is the new reporting format. This has come in from FY21. And prior to this, there was a much more simpler one. And this Annexure 2 now becomes the reporting format. And this is part of the AOC of companies. When the companies file the return, they file a return which is the accounting of companies form. AOC 4 is called that. Make a note and you can check it out on the MCA website. Now for FY21, maybe the companies would have submitted their reports or whatever has happened. I'm not sure. They may be in the process of doing it because they want to capture since FY21, because the amendment came in FY21. So they have given you a window till 31st of March. Read this one. They've given you a window till 31st of March to file your Form CSR2, which has come out only on 11th of February 2022. You have another couple of weeks for it to report your Form CSR2, which is in many ways, when I will take you through this form now after this is the Form CSR2, right? And I will open to you the reporting format of Annexure 2, which is the last year's format. If you compare the two, you will be able to see. I want you to put them next to each other. And you will see that Form C, and I did a detailed analysis of this, a couple of things have come out very strongly in Form CSR2. In a way, reporting is getting more comprehensive with this Form CSR2. There is extra information that was already part of the compliance, which was already part of Annexure 2, but which has been added to strengthen the reporting framework so that Section 4 Clause B can be achieved. Can you see the interrelationships? If this has to be achieved, the board needs to be guided through some executive notification. And that is what the MCA has come out with. And I therefore need to compare this with this. And somewhere, if I also evaluate the rules between 14 and 2021, I will understand the mind of the chess player or the person who's controlling the compliances, the framework. And if I begin to read that, data analysis comes much later, I would say. Everybody is after data I see, which is fine, but the data is a corollary to action. And upstream to action is thought. So can we start reading the thought of the compliance and then drive our action and planning, keeping in mind with that thought process? Then we are 10 steps ahead. As you will see, Form CSR 1 came last time, which is where the NGOs have now been registered on a similar format. And I will tell you what I see is going to lie ahead. And I think that is going to happen very soon, because it is being interlinked with the NGO Darpan of the Niti Aayog. And somewhere CSR is talking about SDGs. And there is an SDG index, which is uploaded on the Niti Aayog website. So, and ESGs are also converging there. So we have to see where this is all evolving, keep that at the back of our mind for our planning, and make sure that the compliance is under the belt as of today, and we are able to score the goal and actually get it approved as a scored goal. That means our targets, whichever we are achieving, should be actually acceptable by the compliance authority. So these are very, very key points to be kept in mind. And so Form CSR 3 is having three things. It has new information has been asked. Annexure 2 aspects have been repeated. And in Amendment 2021, there are certain information, if you see, it says, for example, certain things where some action is meant for the board to take, which is somewhere not getting captured in the reporting format, and one doesn't really know whether the board has actually done that action. Form CSR 2 covers that area. And you come to know this only when you do a comparative analysis of the two reporting formats. And this is what I have done in great detail, and I have kind of summarized with you some of the core points. And now we will go through Form CSR2 very quickly. And if you see initially they are asking the SIN number of the company, name of the company, etc. And they are trying to capture certain basic questions once again in a more detailed way, which were in a way not done in a very, very comprehensive manner in the Annexure 2 of the last year's reporting format. If you compare this with the Annexure 1 of the 2014 format, which I haven't uploaded here, maybe by the end of the session I will, you will find that they have asked some of those questions. And I think, when you fill up Form CSR2, they will again capture it. They're also talking about the financial year to which the company, responsible details pertains, then the SRN or form. It's again AOC form they're again talking about here, because this is the format under which you will file your return as part of the MCA 21 report, the return, like you have the income tax return format. You have to talk about your net worth, your turnover, your net profit. All of these are standard questions that you will have. If I go to page number 2, I am finding that if you see this of Form CSR2 and I see this in Form CSR1, so pretty much similar they have, but they seem to have added one row over here, which is one second. So number of meetings, etc. is again part of this. All of these are again part of this. So this is the new Form CSR2 and this is the reporting format. So again, the director is being pinned down very, very clearly over here. And they are also talking about the number of meetings attended during the year by the director. So the fixation of responsibility is going to be to the person, and that person's DIN number is also getting captured here. Now, if you see the earlier one, the DIN number is not being captured in the Annexure 2 of last year. And here the DIN number is also coming in. So this is the director's identification number. This is also getting captured. So this is important to keep in mind. Then some of these are all part of your earlier format as well. This is the earlier form. You can see provide link to your website. This is the old Annexure. And here, if you see, all of this is getting captured. Here they say impact assessment is a new thing which has come in. And if you see the last year's one, impact assessment, they have this entire one over here. And they're saying, provide the details of the impact assessment of CSR projects carried out in pursuance of sub rule 3 of the rule 8 of the company's amendment rule. In fact, you will see even in the amendment of 2021, they are referring always on 2014. So 2014 to understand becomes very critical, and therefore this comparative analysis that I have done is important for you to understand, because it all began in 2014. If you don't read 2014 and you jump on straight to 2021, then you won't understand Form CSR2. You have to go back. You have to go point by point to understand it. And here they have asked a very interesting question, and it says that, let me come to point number C1. So if yes, whether the impact assessment of the project is carried out, yes, no, not applicable. If yes, now this is the very interesting one. This is now going very deep. I'm going to do this as a deconstruct, because that is what this session is all about. Whether the assessment has been done is also asked by this one. If you see this highlight and you see this highlight, they are the same. Okay, and it has been done. Yes, I have done it. Now, this is a new one. If yes, whether the same has been, if the same has been put up in the board's report. This is not being asked over here. But if you go back to the impact assessment clause in the amendment, it says that, look at B part over here. This is Rule 8B. Rule 8, 1, 2, 3B. The impact assessment report shall be placed before the board and shall be annexed to the annual report on CSR. Somewhere this is not getting captured by this one. It is just asking you provide the details of the impact assessment, but have they been annexed or not to the board report? Now, if yes, whether the same has been disclosed in the board report. So can you see the filling up of the gaps that the form CSR2 is doing, Mr. Krishnaswamy? I think we can also have a bit of a dialogue also in some of these places. Can you see the deeper level where this is going, the form CSR2, to ensure that the compliance of the amendment has actually happened?
They're trying to get out more details. That's all.
They're trying to get out more details to ensure the law clause 4 bullet B is taken care of.
Yep.
It is all interrelated. Otherwise, how does we all keep criticizing that the government is not doing enough to implement a law, because the law is made in parliament and parliament is elected by us, at least the Lok Sabha. So in a democracy, eventually it is on us if there is failure all around and not the government, because the government is by us. And then we can throw them out the next time they come for seeking election. So if we are not understanding this game and this game of chess, then we are not being responsible citizens. That's what I keep telling everybody in my session. It is important that we understand this very, 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 very deeply. So I again go back to this one. So this is an important thing. Now they come upon the set off thing. This was the new thing which was introduced last time, the set off. And if you go to this one, again, the set off is being mentioned here, financial year, blah, blah, blah. All of that is coming over here. All of that is coming over here, if you see. And all of this is, the table has been changed a little bit, but that's about it. They've added a column of balance amount. When you do the set off game, they've added a separate column on balance. If you see here, the balance column is not available here. If you see this one, amount which is to be set off. Now the set off is typically because of a rule that came in last year. I'm sure you're aware about that rule. And that rule is somewhere over here in CSR expenditure. I will just check out with you the rule as well. Just give me a second. I have my hard copies with me. This is rule number 7. Rule number 7, bullet number 3.
Bullet number 3.
Yes. There was this rule which was, if you spend in excess of your amount, you can actually set it off. And for that, they had to introduce a column over here. Okay, but they have gone a step ahead to also check up then what is the balance which is left, because we are giving you 3 years to set it off over the next 3 financial years. So just keep this in mind as you try and understand form CSR2. Again, going ahead now, all of this is pretty much there. Whether the company has completed the period of 3 financial years since its inception, yes, no. If no, then provide the number of financial years completed. This is again very important. Number of financial years is important from 2 perspectives. Both your qualification, whether you qualify or not in that terms, as well as then the CSR obligation once you qualify. And that takes me to the law. What does the law say? In the immediately preceding financial year, even if you're a 2-year-old company and in the immediate preceding financial year, you are crossing these limits of the crores which are mentioned here, you have to do CSR. And then that amount has to be as per this particular clause. Shall ensure that the company spends in every financial year at least 2% of the average net profits of the company made during the 3 immediately preceding financial years. So you may be a 2-year company and you then have to do CSR. And then if this kicks in, so they will come to know that it will be the average of those 2 years in that case, right? Now you go to the next one. Net profit calculation also, they've gone a little deeper to find out what is your profit before tax. What is the net profit as per section 198? Total amount adjusted as per rule 2(1)(h) of the CSR policy. This rule I will just show you. Then the net profit is 2 minus 3. It is the difference of the 2, which is the calculation of 198, minus some set off that you're provided under this rule 2(1)(h). I will show you rule 2(1)(h). Rule 2(1)(h) is over here. If I go to the rule over here, 2(1)(h). Now you can see how I'm toggling this. I want you to do this on purpose so that you understand. So this is rule 2(1)(h). I go to rule 2. This is rule 2. This is 1. I go to h. I go to h. Yes, if you read this rule, you will get all about this. Net profit means the net profit of a company, blah, 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 but shall not include the following. Any profits arising from any overseas branches of the company and any dividends received from other companies in India. So overseas profits and local dividends are excluded when you are calculating this, and this then comes out to be as 2 minus 3. This you have to do it for the 3 preceding financial years to get your net profit. And for that, and this is to calculate your CSR obligation. Your obligation now is to be as part of the 2%, then the minus the set off and plus the surplus that you have to spend. And that is what came across the last year's amendment as well. So basis this, average net profit of the company as per section 135(5). When I say average net profit of the company as per 135(5), I must always go back to that particular section, which is 135(5). Shall ensure that the company spends in every financial year at least 2% of the average net profit of the company. Right. So this is again very, very important for us to understand that this is interrelated to each other. And if you see this 135(5) over here, then one second. I'm just getting so many of these calls. I need to just put this into my aeroplane mode, I think. 1 second. Yeah. Okay. So I hope this is clear so far, Mr. Krishnaswamy. I'm just comparing and everything going point by point and relating it to the rule and the law. Should we halt for a couple of minutes for any questions you feel, or I go through the whole thing and then take up the question?
Now, we had a few questions regarding this so far. Okay.
There is somebody raising the hands also. I think, we could also have some people who are raising their hand, and can they speak also through the video, or they can just text?
We can allow them to speak also.
That will be great. That will be great. If you can hear it from say Vijay Sundaram, I think from SRM, I can see has raised his hand. Vijaya Sundaram.
Raised hands, 1 minute.
His or her, and people could also type their questions, but we could maybe halt a little bit here because we are hitting 10:45. Yeah. And we can subsequently, go forward because this is very intensive stuff here. So there are 2 participants who are raising their hand, Mr. Krishnaswamy, and maybe there are some chats also. Maybe those people who are raising their hand, they can write down.
David, at least.
You want to unmute them, sir?
Yeah, unmute.
But I'm also getting some. We are also getting some chats over here that let it go through first because there is a momentum. So I think let's do one thing, Mr. Krishnaswamy, because there is a momentum here. I request that you please note down your questions and don't even put them onto the chat right now. You can put them onto the chat later on because otherwise it is difficult to go hunting those questions as the other chats come in. Yes. So maybe we can open the chat box around in the next maybe half an hour or so.
Already Q&A, there are 6 questions in Q&A.
There are some Q&A questions also, and then we'll open it up. So let me just quickly go through this. So once you have 135(5) mentioned in it, so remember these are all toolboxes on AOC, form AOC, which is like an income tax return form. You can have to fill up the digits. Okay. Then you go to number 6. It is all pretty much clear. 6 is 2% of average net profit of the company as per section 135. You will write down. Surplus amount arising out of the CSR projects or programs, amount required to be set off for the financial year, and the total CSR obligation, it is 6A plus 6B plus 6C. Let me take you back to the previous amendment, the annexure 2, to see the similarity or the difference. Because this is the key thing, because a lot of people are saying, what is so new or what is different about all of this? We are talking about this area right now, which is the bullet 7 over here. So surplus and set off, and it comes into CSR obligation is
Nikhil, generally
net profit also. Mr. Krishnaswamy, just a second. Let me just complete this point. Okay. We are now talking about CSR obligation. Every year, it is A, 7A plus B plus C, which is exactly here also, which is 6A plus B plus C, where 6A is the 2%. The B is the surplus and the C is the set off. The surplus has to be added and the set off has to be removed because the surplus is because of extra interest accrued, or it could be, any payments that you might have taken at the project level, say from a skilling program, and then you need to spend it. You can't just, because that is relating to the budget of that year. So they are now calling this as CSR obligation. So this is the key word to be kept in mind when people are talking about spent, unspent at the end of 31st March, which is about to hit us in 2 weeks' time, that it is the CSR obligation. And this terminology has kicked in as of 22nd January 2021, because that is when the amendment comes in, and that is when the clauses on set-off and all of it. And remember, the set-off and surplus is also derived from these. This is clause 5, if you see. Provided that if a company spends an amount in excess of the requirement provided, and they're going to spend as maybe, just read this one, such company may set off. So set off is already kicking in clause 135.5 ka proviso, and this was not activated. It has been activated through the amendment of January 2021. And this is being further formulated over here in Form CSR2 as part of the larger dynamics. Yes, Mr. Krishnaswamy, you wanted to say something.
No, you finished that. I just asked about, people have a doubt as to how will there be surplus from any CSR activity.
I will come to that. So let them just note it down, because
that is the only point they will have a doubt now.
Absolutely. So let me just complete the session and very quickly. So now this is also taken care of. Okay. Now, this is the key point that we are mentioning, which is the 6th D. This is the obligation. So when I'm hitting FY21 ka Form CSR2, and for this particular year, it is the CSR obligation that we have to take care of, which includes the surplus and the set-off, for which they've given the reasons very clearly. Now, if you see, now this is a very interesting question. This is an entirely new question that has come in. Number 7. Whether CSR amount of the financial year has been spent. Very interesting one. Whether it has been spent. Suppose my budget was 100 rupees and I've spent 80 rupees. And when I say 80 rupees, I mean to say that I got utilizations of 80 rupees for spending till 31st of March, and 20 may be still with me in the unspent CSRA account as an ongoing project, for example. Then they're saying, yes, if yes, amount has been spent against ongoing projects, other than ongoing projects, both. Because now you will have some other than ongoing and ongoing for which the reporting has also been made very, very elaborate for you. So whether CSR amount for the financial year has been spent, yes or no. Now, if you say unspent CSRA is lying at 20 rupees, if 10 was your, if 100 was your budget, you will have to say no to it, because that 20 is still lying in your unspent CSRA account for the next 3 financial years, and you have time for, because that's an ongoing project. And an ongoing project where you have the money is kicked in by clause number 6 of section 135, which has been activated as an ongoing project, and you get 3 years. If you can't do it in 3 years, then another 1 month, you have to put it into the government. If you read, failing which, you have to transfer it to the government fund within 1 month of the completion of the 3 years from the date of transfer, which has to happen from 1st April to 31st of April of the next financial year. So for FY22 ending, it will be for April 21st to 31st of this year. For FY21, it was 1st April to 31st of April 2021. These are dates to be very, very importantly kept in mind, because if you don't do this, then clause number 7 kicks in. And a lot of people have said, what will happen? We have not done this. If you have not done this, my dear friend, then clause number 7 definitely kicks in, which is the penal provision. And there is some penalty over here. And it specifically refers to non-compliance to subsection 5 and 6. Subsection 5 is about where you have surplus, you have budget of 100, you've been able to spend 80 with UCs, 20 you have not been able to spend and have not been able to allocate. That 20 goes into unspent CSRA, and then in 6 months goes to a government fund. Clause number 6 is your budget is 100, you got UCs of 80, you got 20 unspent, but you have been able to put it into an unspent CSRA, and those projects are running. You get 3 years to spend that money. So if you see all of this, Mr. Krishnaswamy, don't you think all of this is somewhere relating to 4B, to that the board, these are the things that the board must do to ensure that the activities are done. At the end of it all, the purpose and the intent of the law is that since you were making a profit, which goes to clause number 1, you should spend that money. If your intention is to spend and you need more time, then you better show me the allocation before 31st of March. If you can't even show me the allocation, If you can, then you put it into another account so that I can track it for 3 years. And if you can't even show me the allocation, then you put it into the unspent so that I can track it, and you give it to me in 6 months. I will spend it for you. And you give it to me in any of those 5 funds. So it is extremely clear. There is no gray area here. So this is important to understand. And this here, they are going deeper to understand whether amount for the financial has been spent. So when you're saying yes, then you have to give an answer to all of those. Otherwise, you will not be able to submit the form. It will be non-compliance. You can't say, oh, I will think, I will be 50-50 here and there. No, it won't work. You need to be very clear about this. Okay. And this is a new one which has come in, and I thought I will highlight it once again. Now you go to the key one, details of the CSR amount spent against ongoing projects. There is this column of 10. This is the detailed reporting, and this I will now compare to this one. Now the game begins in the detailed reporting format of the amendment format. And here they have again spent a total amount spent for the financial year. Okay. Your budget again obligation is 100. And suppose amount spent is 80 rupees. Then amount unspent will be 20 rupees here for this column. Now total amount transferred, this 20, if this 20 is allocated, so it will be 135.6, which is this one, which is the money will remain with your control for 3 years. And if you could not allocate it, then it will be 135.5 wala category, which is it comes to the government fund in 6 months' time. It has to then go to the government fund in a 6 months' time. So you be clear about where you stand. And this is the amendment wala format. And here I come to the form CSR2, which is pretty much the same. If you go and there is a particular column, project duration. This particular column here has been added extra. This particular column has been added extra over here. And this has been added more than this one, because this is details of CSR amount spent against ongoing projects. So these are those projects which are ongoing, and therefore they would be part of the 135.6 wala category. Can you see the interrelationships? It's all pretty much tied up. So 135.6 is this column, which is out of that 20 rupees that you have passed on to the unspent CSRA, and this relates to 135.6. You must also read that 135.6. Okay. And project duration in months you need to also say, because if it is an ongoing, you want 1 year, 2 years, or 3 years for it. So the government wants to know, because they're giving you 3 years, but maybe you want to end it in 1 year.
1 plus 3, 4 years, if I'm right.
1 is the year in which you are allocating, and then 3 more after that is
3
the
more
rule.
years.
Exactly. So this is the new addition over here, which I thought I should immediately just kind of highlight it to you, and so that people are able to understand with great clarity. Now, if I go further, this was for ongoing projects for the financial year. Okay. So these are those projects which are relating to this wala column, as I said. Ongoing is 135.6. The next column is the other than ongoing projects. And this is the one which they are referring to is the other than ongoing in the amendment of 2021. And other than ongoing is going to be, what will that be? Other than ongoing will be the ones that have actually ended, which will actually end, which would relate to this one, Okay. And here they are saying again, other than ongoing project, serial number, name of the project, all of this is pretty much similar if you see. And here also, it is exactly the same. If I see compare the two tables, there is no difference. So they're again capturing the same. If all this while, please remember the CSR registration number of the NGO has to be mentioned all the time. That is form CSR1. So form CSR1 is for NGOs and form CSR2 is for the corporates. And somewhere they will also connect the two going forward. And this is what I'm seeing, like, as I said, the game of chess. I see this coming ahead for the NGOs, that they might start asking the NGOs who are now registered under Form CSR1 to also submit their annual expenditure project-wise to the MCA under this registration, like they are right now filing their income tax returns as expenses. The ITR is a different game. This is a reporting to the ministry. And then somewhere they might like to compare the data of Form CSR1 and Form CSR2, and then to produce the data that you were showing, Mr. Krishnaswamy, which is on the portal of the csr.gov.in. They will want to further validate all this data by cross-connecting and cross-checking. That is the way where I see this going. So the NGOs need to be into the game also. And I keep saying this again and again. And mark my words, everybody. When you do a partnership, it has to be a partnership, not just in implementation. It is a partnership in compliance also. NGOs, please hear this. It is a partnership in compliance also. You have to make sure that your funding support partner, the corporate, is able to complete the compliance. Otherwise, you won't get the funds. So both are into it, and both need to play the game together on both the pillars, which is compliance with impact. Sometimes there is over involvement in the implementation, which is necessary, and the compliance part is left to the so-called the compliance people in the office, in the teams. They need to work very closely with the implementation teams because they are both interrelated. The rate at which you roll out the projects and you spend the money and you generate the UCs with the CA utilization has to then be submitted to the corporate for the CFO validation. There was the CFO validation that has come in from the amendment of 2021. So this is very important. And I go back to this one. This is the 8C table. This is comparing to the 8C table. I go to the next column over here. Now, if I go to this one, this entire total amount spent for, now they are going deeper into this. If you see, Mr. Krishnaswamy, refer annexure to 8A. If I go to 8A, this is what they were asking over here. Now, this table has been detailed out over here. Total amount spent for the financial year. Amount unspent, they will ask you. Amount eligible for transfer, they are asking you. An amount to be transferred to the fund, they are asking you. All of these are coming across in great detail. And if you see amount eligible for transfer to, this is 136. And this is the 136 that they are asking over here. And if you go to the other one, 135, 135 is this one. Amount to be transferred to fund specified in Schedule 7. They should have mentioned 135.5 over here, which they have mentioned 135.5 over here. They seem to have missed it out. All error from them, but then we can understand this. So basis this, the total amount spent for the financial year, you have to be able to kind of capture it very correctly. And the way they are now asking, it is clearly evident that you can't just kind of do any hedging over here. You will, your data will get cross-checked and cross-tabulated, and it will not go in. You will not be able to submit the reports. And you will not be able to file the form. And if you don't file the form, then there is a compliance issue, just like the income tax return. And I'm sure that there would be ways by which they would like to further, improve on the process, and if there are any rectifications to be done. But that will come to know. We will come to know much later. Now, if you go to details of transfer of unspent CSR amount for the financial year, transfer to unspent CSR account as per 135.6. If you see, 1 second.
Nikhil, the unspent CSR account comes into play only when you have a ongoing project, or simply if you have something unspent, you can open an account and put it there.
That is why it is called the unspent CSRA account. So if it is again simple, if 100 is the budget, I could get the complete UCs for 80. And when I say UCs for 80, the utilization certificate can come in April also, but the booking of the activity has to be as of 31st of March. Right. And then the 20 rupees, and this is where they are saying, now I come to this one. A lot of people are talking about, NGOs having the money and should we take it back from the NGO? My say to this is this, and this is my personal opinion, basis my working in the government, understanding the way the MCA wants CSR to be done, and also keeping in mind that the NGO also is filing a return of income tax. Amount to be transferred to the unspent CSRA, suppose in this case of ours is 20. 80 I have my project is 100 rupees. I've got UCs of 80 rupees. Now, 20 rupees I have to put into unspent and I have the money with me. So amount actually transferred will, suppose amount to be transferred will be 20. Amount actually transferred in the second box is 20. Date of transfer, they want to know to the unspent CSR, that date has to be between 1st April 2022 and 31st of April 2022. Deficiency in this case becomes 0. Second case, my amount UCs is 80. I get the UC as of 31st of March. 20 is remaining, and I've given an advance of all the 20 to the NGO. Right? And the NGO is doing good work, which is backed with my monitoring and evaluation. Then amount actually transferred will be 0. Date of transfer not applicable. Deficiency, you will say 20 rupees is lying with the NGO and they're delivering the project as per the requirement. And suppose, I don't know if in this deficiency you can write something or not, but suppose that it doesn't allow you to write. So you put in 20 over here and you go to answer number 9. It says specifies the reason that the company has failed to spend. Here you can give the project number over here because there will be some serial numbers in this row, I'm sure. Give the number and write down this 20 rupees is lying with the NGO and we are satisfied that they will complete the project in so much of time, which you would have already mentioned somewhere in the earlier reporting part where I have said you will have to specify, you will finish it in 1 year, 2 years, 6 months, whatever. Give that reason. So what I see is, if this is the so-called gray area that people are talking about, if I also make an error over here, inadvertent error, because my understanding and my intent is not to take away the money. My intent is to spend the money. So what is the purpose of taking it back and then giving it back? A lot of company secretaries and chartered accountants are saying this because this is the law, you have to do it. Now, the law cannot be interpreted to defeat the purpose for which that clause has been introduced. Why I'm saying this? If I take away the 20 rupees and I don't give it back in time because of some issue in the company, and the month end comes April end, and I can't pay salary to my staff or out of this 20 rupees, and my staff leaves the project. And then the money comes in May. How will I hire a staff for 1 month to complete that 20 rupees just because an up and a passing of the parcel had to be done? So if I mention it here and I elaborate the reason, I do not see any reason why a notice should come. And even if it does come, you have the reason that I'm complying to clause 135(4), and my board wants to ensure that the activities are active. So the board notes have to be in place. The agenda notes have to be in place. And then they have to kind of, tell it very clearly that the intent gets very clear in your board notes over here. Then you will give an answer. They will have to hear it. It is all on record. So why are we getting so worried about this is my question. So there are enough leeways that I'm finding which are available within these reporting formats, Mr. Krishnaswamy, where if we are able to kind of, put up the information correctly and share it correctly, then it becomes so much easier. And there is no gray area here. There is absolutely no gray area here. If you go to the other one, 135(5) also they are saying. Now 135(5) is the one for the funds. It means the 20 rupees you were not able to allocate. And it goes into your unspent CSRA. And then it goes to the government fund in 6 months' time. Now suppose I come back here. Amount to be transferred to the fund is, suppose I couldn't allocate, so it will be 20. Amount actually transferred to the fund, the amount actually transferred to fund. Now this is interesting. Here they're asking amount actually transferred to the unspent CSRA account, which is immediate because this money remains with you. Amount to be transferred to the fund, amount actually transferred to the fund. Here they are not asking whether you transferred it to your unspent CSRA, which is being given. And from that unspent, have you given it to the government fund within 6 months or not, is what they're asking here. So it is different from A to B. And if you had 20 rupees in your unspent and you've transferred only 10, then there is a deficiency. And suppose you say deficiency of 10, and you can give the reason that our this fund was allocated, and for what reason this fund has not been able to accrue for some reason or the other. Was that an estimation for the projection or whatever? You will have to give the reason. Is that clear? Now, this is what makes this Form CSR1 Form CSR2 a very comprehensive format. And if I go further down, it then says whether any unspent amount of the preceding 3 financial year ending after 22nd January has been spent in the financial year. Again, they're asking this one. This compares to 9A, question 9A over here. Question 9A is 9A. Details of unspent amount of the preceding 3 financial years. They want to go back to the preceding 3 financial years, and this is just a repeat of that. Uska bhi unhone wahi details pucha hua hai. This is a repeat of that. And 9B is also the other one that they are saying. Details of the amount spent in the financial year for ongoing, because there could be some ongoing from the previous financial year which are being implemented this year, but they have to be part of the previous year's budget. That is again a repeat over here. So there is no problem here. Okay. And then we go to, this is also taken care of here. Here you have to understand there are a couple of new things which I've added. This is a column which is a new one. This is the balance. Here they've added a new column number 4, balance amount in unspent CSR account under section 135(6), right? And deficiency also they have again added over here. So you will find that they're going deeper into actually asking you whether and what has been carried or not carried, and if there is a deficiency, to define that deficiency very clearly. And in my sense, because I have not seen this tool online as yet, I think this gives us, this bullet number 9 gives us adequate elbow room to try and explain anything that we want to explain the intent. But behind the intent, my paperwork and documentation has to be complete, which is very, very critical. If that is not there, then we are in grave danger if there is a compliance query that comes from the ministry. Then I go to the next one. This is a very interesting one. Details of the CSR amount spent in the financial year for ongoing projects of the preceding financial year. So they're asking us number of ongoing projects also. There was no such question on number of ongoing projects. If I go over here, it was straight going into capital assets over there. So for ongoing, if you see, and for unspent part, they are going pretty much deeper over here, is my sense. And they want to very closely and carefully capture how much you're passing on to the unspent, and from there, how much time will you take to spend this money, and how much time, or if you couldn't give this money to the government fund, and any reasons thereof for the deficiency. They want to capture all of it very, very clearly. If this is known to the government, I'm also assuming, Mr. Krishnaswamy, that in a year's time or a couple of years' time, the data on csr.gov.in will also start becoming more enriching in terms of the submissions that begin to come in now. I think no more interpolations or whatever will start coming out, because now you will know that if there is an ongoing, because if you have an ongoing and you change the ongoing, you don't get another 3 years for it, 1 + 3, because then otherwise you can continue forever to continue a project and never show it as closed. Once you do a 1 + 3 for an ongoing, that extra 3 remains 3. And if after 2 years you change that project, because the FAQs allow us to do that, you will get only 1 year more to complete it, because the maximum is 3, 1 + 3. You change it for some reason, you have to justify to the board as the FAQs tell you, and then you can take it forward from there. Okay, now I go further down to this one. I also find that here in this bullet number 5, if I see from 9C, if I compare 9C form over here, 9AB over here from 9C, the project duration has been removed in this one. Okay, I then go to the next one, and I find that there's another new section coming in over here. Whether any new CSR project has been undertaken in the financial year from the unspent amount. This is again a new one. As I said, suppose I have an unspent of this 20 rupees and you change it. A lot of people are saying, can we change it out of this 20, which is lying in the unspent? They want to record that change. And then if yes, nature of the new CSR project, ongoing project, other than ongoing, is that going to be another ongoing, but then it will get mad. Otherwise, you can forever continue. How do you stop it? They need to know. So somewhere they also figured out maybe that in this earlier reporting format, there were some gaps. This is again my analysis, where you could maybe have some loopholes to kind of continue to show that you are using that money and the money is actually not getting closed in terms of a utilization. Here you have to very clearly define those things. And those commitments will be checked up as part of your compliance. And you could then be asked if you did not achieve it as to why you did not achieve it. So again, there is deeper questioning, and there is more accountability and greater transparency. But all of it is very doable. If I will tell you some of those things at the end of this, and then we can take up questions, because I think we are hitting 10, 11, 16 already. You have to do certain things to get the game under control. Then all of this is like bread and butter to you. And then you have to focus on the impact. If you are not doing it, then every one of this is like a thorn. It becomes very difficult to deal with it, because you will find that every new circular will be like, oh my God, what is this? But if you are in synchronization, and most importantly, if your grant cycle is synchronizing with the financial year cycle, and that's easier said than done, you need to do certain very, very important things, which I have actually explained in these 13 points in my detailed comparative analysis, which I had shared last year as well, but I will be happy to share it again after this session, Mr. Krishnaswamy. The key thing is this particular one, which I keep saying to everybody, a collaboration between the CFO, the CSR head, the company, the chartered accountant, and the company secretary. If these four people are collaborating and the NGO leadership is aware, and their accounts is also, and their teams are also in touch, it has to be now a partnership in compliance, not just a partnership in implementation. And within that partnership between organizations, within the organization also, there has to be non-silo work across these four verticals, or these four pillars within the corporate. And within NGOs also, the leadership has to work both with the program team and the accounts and audit team. Otherwise, this will not work, and you're going to hit roadblocks. It is a key requirement. I go further to point detail number 4, details of amount spent against new other than ongoing projects is a very interesting one. New other than ongoing can also happen in the financial year. Number of other than ongoing projects, right? So this is another new piece that they have added over here. So when you compare this with this one, you will find that after this, here they had a table which was a little more simplistic, though that also looks a pretty detailed one. Here they have gone some deeper into some new jargons also, because there could be a new one which is other than ongoing project in the financial year. And you need to then give it parameters and mode of implementation, etc., in a detailed format. This gets captured here. Very interesting one has come in the number 11.1 over here, which a lot of people might get a little jittery. Mr. Krishnaswamy has a smile on his face on this one. Whether any amount unspent,
I have been asking you regarding this.
Whether any unspent amount pertaining to FY 2014-15. Now, FY 2014-15 is 1st April 2014 when the rollout began, and FY 19-20 is 31st March 2020, because after that, which is FY 21, the new amendment kicks in. So whether any unspent amount pertaining to this earlier period has been spent in the financial year, yes or no? If yes, details. If no, then it just kind of gets disabled. If yes, then they would like to know if you have unspent money, which somewhere they would be able to already assess because you would have been filing your return. But this is not for any penalty, let me tell you. But I see this also as a gentle nudge, that if I have unspent lying from earlier, I need to come out and spend it. I should, and earn brownie points is what I will say. And this is my, again, analysis, because I know that if I do this, I will then strengthen my delivery of my intent, that my intent was always to spend. But earlier I could not spend because maybe my bandwidth was not there and the project's need assessments couldn't be done. But if the money is still lying with me and government cannot penalize me prior to 22nd January 2021, then I am now in a much better position. So why am I holding on to that money? If you still want to hold it on, nobody will say anything. But if you spend it and you explain that spending over here, you will be able to have some strong collateral. Another principle of good compliance is to earn brownie points when the weather is good. Do that, because then when you're asked those questions and in some areas you are finding it difficult to explain, you can say, hey, see this, I have already spent previous year's money also, because my intention was always to spend, and earlier the reasons were, I was giving the reasons earlier, because after January 22nd, 2021, CSR is no longer, CSR has become mandatory, rather I should say, in the sense that money has to be spent either by the corporate or it will be taken by the government to spend. Earlier it was just comply or explain. If you can't spend, just explain. And you would have explained the non-spend prior to this, which they are asking here. So if you are able to do it, my advice to corporates is, if you have that money lying with you, it is a good idea, or rather not a bad idea, to spend it. Because if you do it in a systematic way going forward, it is earning the goodwill of the community, further demonstrating your intent, because that is also part of compliance management, I would say. And you could engage those projects as supplementing or complementing to your ongoing scheme, whatever, or partner with government. If you don't want to do it, it is not mandatory. But this is an advice that I'm giving based on my experience and the way this whole framework is evolving, which you will again be able to measure when you compare the green and the blue. That's why I keep saying, compare the green and the blue, 2014 and 2021. It is telling me about how the next 2 years to the next general elections, at least, how a particular government is thinking, which has been democratically elected in our country. It is wise to understand that. It is foolish to cry foul and to say, oh, why this, why that. It is wise to understand how it is evolving and then plan accordingly. So this is very, very important. And then if you go to the other one, I think they're already overshooting the time. Some of these are all new tables which you need to go, because these are all for this one. This is the one for the assets, actually. Refer 10 in annexure 2. Now, this is the assets one, which I would like to, just elaborate. This was very important. Number 12 over here. It relates to bullet number 10 over here, which is the assets one. Here they had asked certain things about assets, because now the assets have to be kind of passed on as per a particular rule. If you go back, there is a rule on the assets. There is a rule which is number 7 something, Mr. Krishnaswamy. Let me just show that. Now, which one was that rule? If you remember, capital assets is rule number 7(4). Yes, this is the rules on the assets. The assets need to be transferred to the implementing partner or a public authority and not be held by the corporate. Here, they've actually now converted this into some kind of a table. And in this table, you will find if the asset is through an NGO, they're asking the CSR registration number of the NGO. Here, they are not asking the CSR registration number. So if the asset is owned by the foundation of a company, the foundation of a company is a daughter-parent relationship. The foundation is an NGO, and the foundation will have to disclose that so many assets that were created by the company are held by the foundation, and that has to be disclosed. And then at some point, the foundation or the company may be asked, how is it serving the public at large? And they should not just be using it for their personal uses, because just to show in the books that it is not owned by the company, but it is surrogately owned by the company through the foundation, it is also going to get revealed over a period of time. So again, if you are a foundation and if you hold the asset and you don't use it, and then you get a notice after some time, and then you say, why this? Then this is the reason. You have to understand that it emanates from the particular rule that I just shared with you, which is about ensuring that the asset is fully transferred, and it should be, which shall be, it has to go to the community or the NGO or whatever for the best possible use. Now here again, I find some interesting stuff if you hear the final reporting part of it, if you see. And with that, I think I will conclude, already spoken quite a bit. If I go down and down and down, let us look at the ending point, the signatory. Here they were giving this, specify any reasons. This they've already covered in this one, which I have already showed. This was the answer number 9 of the form CSR2. This was number 9 over here, and I'm just going back. This was number 9. So this specify reasons was number 11 here. It has become number 9 here. And then you go to the final part of it. Who's going to sign this form? That's again an interesting piece. and something to kind of be positive in the sense that it gives us more options. And if you see here, it had to be just signed by the CEO or the MD or the director and the chairman of the CSR committee. Here, it has to be signed by, there has to be a board resolution also over here. I am authorized by the board of directors of the company to sign this. So this is similar to the board resolution that was required to obtain form CSR1 for NGOs. If I see, there's a bit of interesting overlap here. If you see the attachments and the form, this was a similar declaration that the leader of the authorized person of the NGO was doing for the form CSR1. Here it is the company's board to be directly signed by one director. And here similar section 448 and 449 are kicking in, which were kicking in for the CA, who had to verify. And if they were not verifying it correctly, here this has to be not verified by any CA or any financial person. It is the director who has to verify with the DIN number, and then there is an ID has to come in over here. So very interestingly, if you see here, you have some attachments also that you can put up, Mr. Krishnaswamy. If I am not able to explain something under bullet number 9, I have an uploading tool also, which I did not have over here. If you see this one. So I am interpreting that government is hinting that I have given you enough time to spend. I'm giving you enough space to show the leeways or the deficiency or specify the reasons. Still, you want to share something more to show or display your intent, please upload it over here. You can do that, which is a very, very important thing. And some board resolution, if it is required, or some, if you want to explain something which is not getting captured, you can put it up as a document and then signed by your concerned authorized people. So this kind of covers up the whole thing. And I would like to just take a couple of minutes on this one, Mr. Krishnaswamy, because this is what I would share with everyone. Now, this is an analysis that I did in about February 2021, and we are 1 year ahead of it. But this will at least show the comparison of the way the government mind is moving. Read this with this, and then also read the FAQs. There is an FAQ that has also come out. I will just show you that there is an FAQ also, which has come out in August 2021. This also is a further elaboration of these rules of 2021. And after this FAQ, we are having this 11th February one. So the data analysis has to go with the analysis of the thinking of the government to then plan your further investment, which is to generate further data and to be more prepared with the compliance. And this has to be done in partnership, as I said, with your implementing partners. And the key role has to be played through this pillar. And these 4 people should meet every quarter, I feel. If they meet every quarter, because the CFO tells you how much money you have, allocates the budget to the head CSR. The head CSR rolls out the program, gets the utilization through the CA of the NGO, and then maybe the CA of the foundation or the corporate will verify it. And then the company secretary files the return, which will mean also this one, which is the form CSR 2. And here, if you go back now to the starting page of this form, it is like, it is an annexure to this year, but I think going forward, it will come out in some pattern. And also remember, to be published in the Gazette of India, I don't think this has been published as yet. So they have not, this has not been activated as of now. To the best of my understanding, if I am mistaken, somebody can correct me, because I keep tracking and I have not seen this. But since the deadline is 31st March for 2021 FY, I think it is going to come out within the next couple of days or a week or so, because it has to be activated as well. And that kind of, in a way, completes my entire detailed narration, Mr. Krishnaswamy, where I hope our audience is able to get a sense of how they need to understand this evolving framework, get their bite and teeth into it, and think steps ahead. you have to have the capacity to think steps ahead, because if you think steps ahead, then it is like kind of so much easier for you to plan your compliances and all that goes with it. It is a very, very key requirement, if you ask me. So over to you, Mr. Krishnaswamy.
We have some hands up. I think we'll ask Mr. Vijay Sundaram to. Mr. Vijay Sundaram, are you online?
Yes, I am online.
Yeah, tell me. Any questions?
Yeah, good morning to Mr. Nikhil Pant and Krishnaswamy. Thanks for giving me this opportunity. And I'm regularly, participating in Nikhil Pant's seminar, webinar. And thanks to Krishnaswamy for inviting me. So, first,
where are you? Where are you from, Mr. Sundaram, and location and organization?
Yeah, I'm coming to that. I am Vijay Sundaram. I am based in Chennai. I am a freelance consultant to NGOs. And recently, I had an opportunity to be involved in this impact assessment of project by some of the corporates. Now, so what happened is that I think the corporates are required. I mean, it's mandated to carry out the impact assessment, right? If that is the case, is it the corporate going to bear the cost of the impact assessment or the NGOs? Number one.
Very good question. Very good question. And in fact, that reminds me, I have forgotten to showcase a very key Excel sheet, which we will also share, Mr. Krishnaswamy, as part of our document. And if my screen, I will again share. This is a very, very key requirement for you to remember, Mr. Sundaram.
Yes.
You will see from this sheet that I'm sharing. Can you see the Excel sheet?
Yes. Yes.
Now, this sheet is the whole mantra.
All right. Right.
If you see this sheet, this is your 5% is admin overhead.
Yes.
Then from here, B, C, D, E is 95%. 5% may admin overhead is permitting to do these green activities, which is the compliance board level activities and annual action plan and all of that. If
Right.
your remaining 95 includes the 5% on impact assessment, if it is eligible for you, and then the remaining 90 has to be on designing of CSR projects, implementation, and M&E. All of this is part of the 95. And if you don't have to do impact assessment, then all of this is your 95. So it is part of the budget out of the 95, and this has been permitted through a particular rule over here, which, if you see, is mentioned in rule number. There's a particular rule over here of the amendment which mentions the budget also. And I think it is somewhere in this rule number 3, A, B, C. Mr. Krishnaswamy, if you could help me. This one, C. A company undertaking impact assessment may book the expenditure towards the CSR for that financial year, which shall not exceed 5% of the total expenditure. So when I say 5%, it is this column that I'm talking about, 5% if you see here.
Right.
And it is this column that I'm doing.
Okay.
Okay. It is actually permitted by the law. The law permits you to spend it, and maximum of 50 lakhs. So also remember, it should be not before 1 year, but it is not saying that you must do it after 1 year, within 1 year. No, it is saying that you should do it within this budget. And if you have limited budget, you prioritize your impact assessment. And maybe my strategy is do impact assessment of those projects, qualifying projects, which can dissipate faster, earlier. For example, a skill development project where you do a 3-month project and then it is very difficult to track the people. Do it early, just after 1 year, with that budget of 5% up to 50 lakhs for that financial year.
Yeah.
If you have a school program where the child is in class 3 and is going to remain in the same school till class 12, you have more time. So strategize your impact assessment, implementation, and billing accordingly.
We have more people waiting. We go to the next.
Is that
person.
okay, Mr. Sundaram? Sure, I think so, Mr. Krishnaswamy.
Yeah. Next one, Mr. Narula.
Yes, Devesh. Devesh is one of my students also. Nice to have you, Devesh.
Yeah. Well, I have one more question, sir.
Mr. Sundaram, let's go. Let's give others a chance also. We'll come back to you. We'll come back to you.
Okay.
Yes, Devesh.
Hi, Nikhil. Thank you so much. And it's really amazing that the way you explain. My question is straightforward or related to the asset management. So is it that possible that foundation the company's foundation can keep the asset with themselves, or is it necessary that the asset has to be transferred in case to implementation agencies or the beneficiaries?
So very good question. If I go back to the assets rule over here, always good to consult the rule. The rule says very clearly, number 7(4), the CSR amount may be spent by a company for creation of assets. A company under section the CSR amount may be spent by company for creation or acquisition of which shall be held. Key point, why I'm showing it, shall be held by a company established by, so if the foundation is a section 8 or a registered trust or a registered society, then the company's own foundation can keep it, having charitable objectives and a CSR registration number. So it's also important, Devesh, to remember that the company, if it is qualifying, should also be permitted by its own constitution to have capital assets acquired. Are you following?
Right.
Otherwise,
So,
you cannot. But what I'm saying, basis the form CSR2, you are also disclosing the CSR number as part of the capital asset allocation reporting. If that asset is not put to public use, it will get exposed over a period of time, and that may lead to some action. It could. It is not mentioned anywhere. Again, as I said, your intent will be clear by your actions and your documentation. Fundamentally critical point.
Thank you. Next we go to Amit. Is one more of IACA student. Amit, you're online.
Hello, hi.
Where are you? And okay, Devesh didn't mention that, but Amit, where are you calling from and what's your organization?
Yeah, Nikhil, we met a couple of times before. And thank you, Krishnaswamy for organizing this webinar. Nikhil ji, I am from Bangalore, from Collins Aerospace. I had a CSR here. We met in Shishu Mandir,
Yes, I remember very well. Absolutely.
Yeah. My question is, when I met several organizations here in Bangalore, that which goes with the example that you have given, out of 100 rupees of a CSR budget, which is being transferred to NGO for the spend in that year. So company perspective, we can say that we have spent, but because of COVID situation, they could not utilize all 100 rupees, but do only 80 rupees, and 20 was spent in later months. So can we say in the CSR2 form that we have spent 100 rupees?
That will be a little difficult to say, and I'll tell you why, Amit.
Yeah.
You are actually referring to a particular question here of the money which is part of the ongoing project, right?
Though we have not mentioned that
you have not
ongoing.
called it an ongoing. You have not called it an ongoing.
Yeah.
So the first step is to call it an ongoing before 31st March. You can do that.
But that we can call for this year, because
yes,
that year has already gone.
For this year
Yeah.
you can.
But this is for previous year, right? Year ended.
Which year?
I'm talking about 2020, 21, because this.
So 2020 doesn't come into it, but 2021 does come into it.
Yeah.
So if it is 2021, FY21, and you had unspent money lying, right? So
Yes.
whether with you or with the NGO, this
Correct.
form CSR2 gives you the leeway to explain it in a better way, but it gives you the leeway to explain, but it doesn't give you the leeway to excuse yourself. You can explain, but you can't get an excuse, because otherwise clause number 7 kicks in, which says that if you do not comply with 135(5) and 6, then there is a penalty which can be kick in and which may not kick in. It is again up to the government to take it up, as far as I see it. So it is critical, Amit, that the money by you cannot be reported as spent just because there was COVID. You will say that the money is lying with the NGO, and now with this form CSR2, you can report it as an ongoing project, or you can explain it also over here now. You get another chance even if you have submitted the report. That is why this is, if you see, this is very important. Very good question you're asking. If you see the first page, it says this. Just read this particular. Provided that for the preceding year, this is the year that you're referring, form CSR2 shall be filed separately, because you may have already filed the AOC, which is part of the reporting. you get another opportunity over here, and you could explain it over here under the bullet number 9, which I was mentioning, which is bullet number 9 over here. But do not report mere transfer as spent for whatever reason. You can say that the money is with the NGO, and maybe you could then now report that you didn't take the money back, so you can call it as a deficiency. And under the deficiency, you can actually then say that it is part of under the reason number 9. You can explain the reason over here. And if this is, but you did not call it an ongoing project, so that is one concern that I will have. So you didn't qualify that as an ongoing project, right? Before 31st March 2021.
Right.
And what you have already reported it as if you've spent it.
Yes.
And the money was lying with the NGO completely.
Yes. That 20
so then you
rupees,
have
yes.
a way out. Then you have a way out. You can say that this is actually qualifying under 135.6 if you ask me. And you can say that amount, suppose this was 20 rupees lying with the NGO. So what you can say, amount to be transferred to the unspent CSR account was 20. Amount actually transferred 0. Date of transfer not applicable. Deficiency rupees 20. And you give the reason of 9 rupees over here, that because of COVID, we gave them a no cost extension and the funds are lying with the NGO and they were able to spend it in this much of time or whatever.
Perfect.
Because you get a chance now for this FY21. This is what I'm trying to say.
Absolutely.
Thank you, Nikhil.
Thank you so much.
Yeah.
Thank you so much.
Yeah.
A lot of people waiting. Can you, Tejashwini, yes, please. Yes, Teja.
Tejaswani, your organization and from where you are calling.
Tejashwini, you've been. Yep, you can talk now. You can unmute.
Yeah. Am I audible now?
Yeah.
Yeah. Nikhil, first of all, thank you. It's very informative, session, and it, I cleared a lot of doubts. I based out of Mumbai. I work with HDFC Life and I look after CSR here. So I have a couple of questions. One is that if I have some amount in my unspent account, which is allocated amount, I mean, I know where I'm spending it. It's already approved by the board. But this year, if I'm willing to set off some amount from my last year excess surplus, so can I do that?
Again, can you just give me some numbers to say what you're trying to say?
Yeah. So for example, the last financial year, we have say spent 100 rupees extra. And now we
100 rupees beyond your CSR obligation, you mean to say, for
beyond
FY21.
my CSR obligation, right?
Okay.
And now that is the surplus amount, but also out of our obligation, say for example, we have some unspent account, say 50 rupees unspent account, which we have already, transferred to the unspent account. And now this year we want to, if at all I want to, set off some amount out of, excess 100 rupees, can I do that?
So very interesting question. So let me just take you to that one which defines 6A. So can you see this answer in answer number 6 of this form CSR?
Yeah.
So 6A is your obligation for FY22.
Right.
Suppose the obligation was 100 rupees. Okay. Suppose the obligation for FY22 is 100. Okay. There is no surplus. And the set off amount required to be set off for the financial year is, suppose, what was the set off from previous year? Suppose 20 rupees is the set off, suppose.
Right.
And my obligation here was 100 rupees. Right? My obligation is 100. Sorry, my 2% is 100 rupees. So 6A is 100. You can take a paper and pen. Your 6A is 100.
Yeah, I'm doing that.
6A is 100 plus 6B is 0 minus 6C is 20. How much do I get in this box? 80 rupees?
Right.
You want to spend 80 this year?
Yeah, I mean, I want to set up the amount.
So then it's fine. So your CSR obligation for this year becomes 80 rupees, which means you want to spend less than 100. So 6C is taking care of it. You got the answer?
Yeah. So can I do that? Still, I have some amount from last financial years in unspent.
Yes, you can. Yes, you can.
can.
Because
Okay.
yes, you can. That's why we are doing this session, Tejaswini.
Right.
You can. Please talk with your CA right away and discuss this. Give reference to what I just told you. Show 6A. 6A is exactly about this. Because if you overspent last year, and this is where this has kicked in. It is, and you, if they don't understand your language, show them the law. Show them the law, which is this one. Provided also that if a company spent an amount in excess, so provided that HDFC Life has spent in excess 20 rupees beyond 100 rupees under this subsection, such company may set off excess, which is 20 rupees amount against the requirement for the next year, which is 100 rupees. You want to do it right now for 20 rupees, you can, or you can actually stagger it over a period also.
Right. So it's Allah. Okay. So I would be able to do that. Okay.
Absolutely.
Thank you.
You
Thank you. And also, I have one more question about impact assessments. Impact assessments are applicable to the projects which are like 1 crore or more, or your total spend is more than 10 crores or more. So the first rule, probably I will be tick off that, but for projects 1 crore and more, not all my projects are 1 crore and more. For which years I will have to do the impact assessments?
So every company having a net CSR obligation of 10 crore rupees or more, which HDFC Life has.
Yeah.
So you are eligible for impact assessment. Okay. But every project of yours may or may not be eligible.
Okay. So only the projects which are crore and more, those are applicable.
Shall undertake impact assessment through an independent agency having outlays of 1 crore rupees or more, and this should be within a year. Whenever they're talking about these things, it is within the financial year, and which have been completed not less than 1 year. So if you have finished a project if you have finished a project on 1st of March 2021, 1st of March 2021, right? And its budget was 101 lakhs. Okay. Then as of end of February 2022 and now March, your eligibility for the impact assessment of this project has kicked in.
Okay.
You can allocate 5% of your CSR budget in FY22 to do impact assessment of projects like this, up to a maximum of 50 lakhs for this from this year's budget, which is FY22. You may not do it this year. You may do it next year also. But you have to do it because your budget was 101 lakhs.
Okay. Got it.
Is that clear?
Yeah, clear. Very much clear. Thank you.
We'll have one more person in on the mic, and then we will go to the question box, Nikhil.
Because you've got to keep track of time also, I think.
Radha Srinivasan, please.
Yeah, can you hear me?
Yeah,
yes, Radha. Your location and organization, Radha.
Hi, Nikhil. I was your student in the last batch. Yeah, I'm from Chennai. I'm a CSR consultant and I work with NGOs.
Right.
I wanted to understand this new thing that has come up, new other than ongoing projects. So whenever we say other than ongoing projects, then that has to be transferred to a fund, right? Within 6 months.
Right.
They don't allow the corporates to spend it.
Right.
What do they mean by new other than ongoing projects?
So the new other than ongoing, have you read the FAQs of August?
No.
If you do that and you do an ongoing search, whether registration can, what is the role of ongoing project?
Yeah.
I'm going to give you the answer just by reading the FAQ. Okay, then we come here. Read number 6.6. You get your answer.
They can abandon an ongoing project and change it to something else, and that is new.
Now, an ongoing, suppose you had 20 rupees in unspent CSRA account, which is under section 135(6).
Yeah.
And you need maybe 2-3, you have 3 years to spend it, that 20 rupees.
Yeah.
but you find that the project need has disappeared, there was a catastrophe, or the NGO doesn't want to work the way you want it to work, or the beneficiaries have left, something. You want to change the mandate out of this 20. So you will have to take an approval from the board by giving reasonable justification as it mentions.
So
and then this will be, isn't this an ongoing? Yes. But suppose you change it from a skill project to a culture project, is it not a new ongoing project?
So the important point is this is only if you have defined it as an ongoing in the first year.
Then
otherwise you can't use it.
The prefix of new coming to ongoing to project is only applicable if it is an ongoing project.
Yeah, otherwise it has to go to the fund, right?
Absolutely.
Right. Thank you so much.
If you see the way the government has come out, it is very, very remarkable. They've gone to great depth to kind of, yes, Mr. Krishnaswamy.
Okay, can you open the question answer box, Nikhil?
Okay.
Quite a lot of questions over there.
So can you just read them out, some logic wise, Mr. Krishnaswamy, or
see under schedule, first one is Shilpa Narayanan, under which schedule will strengthening of citizen civic governance mechanisms for democracy fall under? Panchayat Raj and everything.
So somewhere you can do promoting education also if it is an
promoting education project. Can bring it inside.
Yeah, it could be section, the clause number 2 if you ask me.
Okay. Next one is 2% liability of ₹10 donated to foundation. Now foundation debited 10 rupees to its implementing partner to carry out. Can foundation book this ₹100 CSR or explain? This is again, I think you've explained this. You give some money
wherever I've explained, let's not repeat it, Mr. Krishnaswamy.
That's right. If a company owns for calendar year, company financial year ended 2020, do they need to file form CSR 2?
For FY21, they have to file form CSR 2 by 31st of March.
31st of March. Okay.
Absolutely.
Okay. As per rule, impact assessment of 10 crores and above, I think you have spoken about that.
Right there are two parts over there. One is the qualifying company, and then there is the qualifying project.
Project also.
And then there is the qualifying budget for it.
So
there are 3 steps to it.
Okay. CSR 2 starts from 2021. Yes, that is very clear. What treatment projects shall get for impact assessment? The impact assessment, I think we have already clarified. How does CSR 2 form go to impact the evidence furnished by NGOs against funds received from corporates?
So wherever they have these doubts, the NGOs have to understand that they are, as I said, they have to be partners in compliance. And somewhere the form CSR 1, I'm anticipating, might start capturing their performance and their data, because the companies who are giving them are reporting to the ministry, and only Section 8 NGOs are reporting to the ministry right now, not the schedule, not the trusts and the societies, 1860 societies. So somewhere this form will bring them into the same line very soon, I am assuming.
Archana Chaudhary, under point number 3 of form, turnover, net worth, profit to be reported should be as on March 31st, 2020. Or that depends on the particular year which they are filing for.
Yeah. There is a formula that kicks in over there.
Yes.
So it's very important, Mr. Krishnaswamy, people who are asking questions, often they're not reading the material, and we will be happy to share the material through the website.
We can send it across.
Yeah,
we will water conservation, and it's an initiative that the company take part. Yes, very much can go in for that. It goes under environment. Then scenario, company is having obligation to spend 100 crores. As that is CSR budget. Company has given 100 crores to implement against towards project other than ongoing. However, NGO is able to spend 90, remaining 10 is in the NGO's account. How is this treated?
I think, Mr. Krishnaswamy, what you can do is, we have generally answered most of the questions. If there are some people who are raising their hands and people who are listening, if you think your question has not been answered, whether it is orally or the one which is written, I think the raising of the hand, only those people raise their hand who want to ask questions and queries which have not been covered. So
Can I
participants, you can go
one by one. 2 or 3 more to talk?
Yeah, sure.
Okay, Sonal, please.
Sonal, where are you from and what is your organization?
Hi, Nikhil. I'm from Mumbai and working with L'Oreal. So my question is that my CSR budget is less than 10 crore and I'm not eligible to do impact assessment. But in case I still want to do an impact assessment for one of the projects, can I still consider this 5% capping part of my CSR budget, or it would be over and above my CSR budget?
See, your budget is very clearly defined over here. And again, let me just share with you 1 second. Let me just do the screen share. And I keep saying this to everybody. When we are doing these interpretations, it is extremely important that 1 second, is my screen visible?
Yes.
So if you see,
Yes, yes.
a company taking impact assessment may book the expenditure. Now here they are not saying that a company taking mandatory impact assessment, right? It is saying a company taking impact assessment may book the expenditure towards CSR as per a particular formula, which I've shown to you over here. This is the formula.
Yeah.
In the B column. So you can.
Thank you.
Yeah.
Okay.
Anybody else?
Next is Chahat
Baveja. Chahat, where are you from? In which organization?
Hi, Nikhil. I'm from KPMG, working as an associate consultant.
You're also one of our students, I think, in the batch,
yes,
I guess. Okay.
So I had just small questions. One was that will final asset be mandatory to be reported in Form 2 and CSR annual action plan both? The final assets of the company, is it mandatory to be reported in Form 2 and CSR action plan, annual plan?
No, CSR action plan, if you see the action plan, Chahat, have you read the CSR action plan?
No, I was talking about CSR annual plan. Is it?
CSR annual action plan, no? The annual action plan.
Yeah.
So the annual action plan, if you see, is, I guess, coming somewhere here. If you see the annual action plan, it has to have the list of projects, your manner of execution, your modalities of UCs, your M&E, and details of impact assessment. It doesn't mention your capital asset creation. So they need to be reported as per your form CSR 2.
All right. And the form CSR 2 reports in 12th point, the mention of capital asset. So what all can be included as a part of capital asset? Land comes under it or not?
So whatever, see, please understand, capital asset is a financial connotation. Right? Capital, any creation of capital, which is in the form of an asset, has to be considered under this aspect. So there could be so many. And what we advise is that consult your chartered accountants, consult your financial experts, make sure that also is like a nomenclature in the proposal when you are raising a proposal for budget sanctioning from a corporate. Because when you're filing your report as an NGO or as a foundation, you will need to keep this in mind. And again, good point that you've reminded me, Chahat. When NGOs are developing project proposals or when corporates are putting up RFPs, please consult the reporting format and now form CSR 2 very carefully when you word your jargon. Because if you are able to create the right jargon and the submissions happen accordingly, this is part of the compliance under the belt and at the back of your hand approach. Okay.
Right. Okay.
Thank you.
Just last question. How do you explain both ongoing and other than ongoing projects?
So the other than ongoing is those which you finish.
Single
ongoing is under section 135 for which you get 1+3, and which you cannot even allocate, they go to 135.5, which go to the fund. So other than ongoing are those which you complete within the year with 100% utilization, with UCs coming in for 100%, not mere transfer. If they are transfer, then it goes into the unspent.
Right, but the third option includes both ongoing and other going. How can a project be both ongoing and other than ongoing?
No, so the other than ongoing is those which are completed.
All right. Okay.
Yeah. The other than ongoing, as I said, if 100 is there and 80 is there and 20 goes into 135 or 135.6, then it is 80 which is, so technically and typically speaking, your other than ongoing should define your complete. If I in fact, I will show this to you again. If you see this one, which was that bullet, if you can tell me 1 second. There was a particular number on that, no? Other than ongoing, which question was that? Which number was there on the form? Number of ongoing projects and this is number 5. Page number 5 will be details spent against other than ongoing. So this is 5 cut 2. This is page number 5. 1 second. Page number 5 may, if I go, this one. Details of CSR amount spent against other than ongoing projects.
Right.
So item from the list of this is schedule 7, name of the project, local area, location of the project, amount spent in the financial mode. So are they asking what is the unspent over here? No, because it is other than ongoing.
All right. Got it. Yes.
In case of ongoing projects, they will ask you where it then begins to, they have a deeper question over there. If you see over here, so this is the ongoing one. No? In case of the ongoing, they will want to ask you, so how much you are spending in that year? Amount spent in the financial year. If you see this column. Okay, here the amount will be mentioned, which is what you are spending, and the other you will mention it is going into the unspent CSRA, which will need to tally with this one. If you go to the other one, it has to be tallying with this table. And if I go to the previous form, it has to tally with this one, the annexure 2 wala jo form tha na previous year ka. In fact, a lot of people are getting confused on this, and therefore reading both of them together is very important. So this is the key table here. This helps to understand better. The total amount spent will be 80 rupees here. Amount unspent ye hai tumhara. Now amount unspent may, if it is 135.5, it is the schedule 7 fund. If it is 135.6, it is the ongoing. So this refers to 135.6. This one refers to 135.6. Details are spent against the other than ongoing, because other than ongoing is that 80 rupees jo ki tum yahan report kar rahe ho here.
Right. Okay.
Right.
Yes.
Nikhil, can we take those questions which came earlier?
Yeah. Just go one by one, and then we should be. I think we're already hitting now. We've already crossed 12 o'clock.
Just what had come earlier. Can I just share the things, questions?
Just share the screen if you can, actually.
1 minute.
I think quite a few you might have even covered, and while you're doing it, many thanks to everybody. You can share their feedbacks, and if there is a format to share feedbacks also, Mr. Krishnaswamy, you must.
Is this visible right now?
Visible.
Okay, what is the status of unspent amount up to FY?
No, yours is not visible. Yours is not visible right now.
Not visible. Mine is visible.
You've not shared your entire screen. It seems.
It's it. 1 minute.
Yeah.
Now?
One second. Yeah, it is visible now.
Okay. What is the state? The unspent amount to FY 1920, you clarified. If necessary, you spend. If not, you leave it. That's right. Okay. Then what is the implication for any unspent amount lying with us from 2021? Somebody has got some money for 2021 which has not been spent. What happens to that amount? I
explained to that lady from HDFC Life, if you remember.
Okay.
We've given the answer for this.
So it goes in for a penalty, or can I?
No. So they haven't. So they will have to show it as a deficiency, and then as a reason is what they have giving an opportunity till 31st of March.
Okay.
It could have been into a penalty situation. So I think now that they have given this opportunity to explain further, let us use that opportunity. Even I don't know how the ministry will respond, but I think this is a great chance to explain yourself correctly.
Okay. Well, filing Form CSR2, they can explain this.
Yeah. And then bullet number 9 gives you the reason where you can specify those reasons.
Now, the utilization certificate from the implementing agency to the corporate, what are the primary points to be available over there?
So it could be an endless thing, but the best is whatever is your approved cost sheet in the MOU.
Okay.
The approved cost sheet, which has your recurring and non-recurring expenses clearly identified, needs to be mapped with your utilization certificate.
Okay.
And they must say that if it is 50%, then against this cost sheet, what is the utilization?
Okay.
The CA will give you that with the UDIN number.
Okay. The next one is people are receiving, the corporate gives the NGO funds. Okay. And the specified funds also, it goes up. Now, can they use the IT exemptions available? Some people are using.
Yeah. So this is again, I'm seeing that people are using, and with ATG and all of that, people and corporates are using it, I'm seeing. And
there is no rule saying that it should not be used.
And now when they are also saying that ATG is necessary for doing CSR, so you know, maybe I think one should keep filing it and then make the most of it.
Okay, that's all. Now, so the 31st March, say the March year, and one corporate has found out that they have to spend some money for this year. Okay, they are searching for NGO. There is one NGO who is already 50% through in one program. He wants some additional money. Can they go partake in that project? And
I didn't understand.
No, the corporate has some money left over to be spent by February, which they're supposed to spend before the March 31st. Okay.
Right.
Now getting a new project, everything is difficult. Supposing they get one particular NGO who's already doing a project, can they join that project, spend the money in that project, and report separately?
Yeah. So they can just do an addendum to the project. They can do an addendum to the project and show that as, and then convert it into an ongoing, because they will need more time.
Okay.
Do an addendum to the NGO because that NGO is already doing, justify it, and then do it as an ongoing thing. Some Mahavir just mentioned that in the FAQs, they have mentioned that ATG cannot be permitted. Mr. Mahavir, if you can come on the call, that will be great.
1 minute. I'll stop sharing now. I think this.
You could just stop sharing.
Mr. Mahavir Jain was raising his hands.
No, and he's saying because, 1 second, ATG is, because this is again an area where there are a lot of ideas and a lot of thoughts.
Yes, Mahavir Jain is there. Yes.
Sir, can you hear me?
Yeah, now we can hear you.
Yeah, so I mean, in these FAQs, I mean, I can just look up to and mention it. But one of the FAQs actually clarifies that tax exemption for the CA companies which CSR is where they are eligible for CSR spending, they cannot take tax benefit.
Can you tell me the FAQ number? I have it.
I'll just give me 2 minutes. I'll respond. Till then, you can take another question.
That's a good question, and I will give you my views on that.
Okay. Now, meanwhile, I'll take another question. Raju,
so Mr. Krishnaswamy, I am just going to do a screen share here because that's a valid question that has been raised. And I will just do a screen share here to take care of this. So, Mr. Mahavir, so I have done this thing. So on ATG, let us see what all is there on ATG. One is which entities. So if I do this, is the first out of this. Which entities are eligible to access in? So this is ATG point number 1. They have explained one. Second is other bodies of company. This can do ATG. Third is again ATG, income tax, required to have income tax regional. So they are giving an answer the same. And the fourth is ATG. So there is nowhere where it is mentioned that it is cannot be. So which bullet are you referring then?
Nowhere we've been able to locate that. It should
we have not located that, Mr. Mahavir. So I have everything in front over here. So tell me which one, which
3.11, sir.
3.11.
114.
3.11 is what you're saying, huh?
Yeah, 3.11. Page number 9.
So no specific, so ATG is not mentioned here. No specific tax exemptions have been extended to CSR expenditure. The Finance Act also clarifies that expenditure does not form part of business expenditure. So that is fine. See, ATG is a benefit which is like under, if you see the ATG and 12A go hand in hand.
Okay.
So if you talk to a lot of the chartered accountants or the tax experts, you get a mixed view. So what I have seen is this, that if you give the ATG certificate to the corporate and it files it in its return to get any benefits, there are exemptions which have happened. So again, these are part of those where they are not specifying over here very specifically on ATG. So this is no specific. So ATG is not specific to CSR. ATG you get on donations also. So they are saying no specific tax exemptions have been extended to CSR, but ATG is not specific to CSR. It is much before CSR came in.
Okay. So it can be interpreted like, organizations.
Absolutely.
Because when CSR is a compliance aspect, then
so that is what I'm saying. That's why I opened it right away. There is no specific one.
Okay.
Rather, now they are saying you have to have specific ATG to do CSR. Under the new rules, you have to have 12A and ATG. Right?
Okay.
Are you aware of this or not?
Yes, I'm aware of it. It's just that when it says no specific tax exemption have been extended.
No. Are you aware that under
Mahavir, you can just Google there are court rulings stating that it can be utilized.
Okay.
And again, if you see this one, not 12A and ATG are mandatory for CSR.
It's available.
So there are, so you will be getting those. So I hope that takes care of your query as of now.
Sure. Thank you, sir.
No specific one for
Nikhil, can you wind up or just one more
question? I think let's just wind up. We will share a lot of it. It's good to see almost 100 people still with us 2 hours down the line.
Okay. And Mansi, Manisha, please, excuse me, Raju.
We will, I guess, get back to you in some way or the other. Yes. And you are free to connect with me as well. My email ID, I can just share with you. It is nikhil.pant1970@gmail.com. You can write to me also. And Mr. Krishnaswamy's ID is also available, I think, on his website. You can go to lakshya.co.in as well to see my ID. Go to the Lakshya website. And both Mr. Krishnaswamy and myself are, very, very proactively engaged in strengthening the ecosystem. And when we do this, let me tell you, we all want to together work to strengthen the democracy in our country. The larger purpose is that. And all of us, each one of us has a role to play. So wherever we can learn from you, you can have counter questions, we can do debates, feel free. And this forum together, these two organizations will work together to kind of further strengthen the entire effort of enabling and empowering and engaging and exciting everybody, because this is an area of passion and drive, and SDGs have to be accomplished. We have to do a lot of capacity building. And as I would like to end by saying this, Mr. Krishnaswamy, and then over to you. It is a partnership in compliance and implementation both. If we look at ensuring that compliance is under control, we can really focus on impact. And my last sentence, and now no more than that, is CSR should be a surgical strike on the development sector, like the Balakot strike. You have to have the goal in front of you. Your CSR goes in, your project should be like the fighter pilot that went there. Your ammunition has to be very good. Your bullets and the guns, you just can't go over there and say, oh, my bomb is misfiring. Then you can't get another chance. So it has to be looked at it from that point of view to generate huge impact. So thank you once again, and my namaskar to everybody on behalf of Lakshya. And thank you, Mr. Krishnaswamy. As usual, you are the driving force in these efforts through CSR Spark, and we shall continue to kind of try and do our best.
Thank you, Nikhil. And finally, I'd like to thank all of them who helped us out, especially innovative. David is still there on the line. We've been beyond schedule, we're running. And Venkatesh had to leave. And I have a group of patrons and advisors. Of course, Nikhil is one of the advisors for CSR Spark. And any doubts, you please write to us. We will try to do one thing. We will try to pull up all these documents which Nikhil is going to give us, put it in a drive along with the recording of this program and share it to all of you. That is the best thing we can do. Okay. And thank you. Thank you. We'll meet again.
Thanks again. Jai Hind.
Thanks a lot.
Your best.
Thanks a lot.
All the best.
Thank you, sir. Thank you, Nikhil. Thank you,
David.
Thank you,
David.
sir.
Thank you, David, so much.
Thank you, David, so much.
Thank you. Bye.